Hey, James, can you hear me, bud?
I can hear you. Can you hear me?
Yes.
Okay, awesome. We're a few minutes early here, so we'll probably get started about 8 o'clock, just so that people can join. I don't want to get started too early.
Yep, sounds good.
I don't know about you, Luke, but normally I'm not up this late. I've got a 5-year-old and a 1-year-old, so normally I'm in bed by about 9 o'clock, tops. I wake up at around 4:30 every morning.
Jeez.
So this is a little early for me, or a little late for me, rather.
Yeah. I can still hold it down for my days of closing restaurants up. So this is still relatively early for
You
me.
got to keep me going. I had a cup of coffee about 5 o'clock, so I'm pumped.
All right, on. Good to see you in here cruising. Randy Bobandy, that's a top profile picture right there. I love that.
I see a lot of familiar faces on this space.
Yeah.
I can't see a number of how many people are in.
4 by 8 rows here, I think. That's
Oh
32,
wow,
34 people.
that's respectable.
Yeah. Pre-rev company. We have 3,400 people on here in a year from now. So let's go. You do any sports betting, James?
No, I'm a Boston Red Sox fan actually, and I know
I
you're
might, I
a
might
Blue
have to.
Jays fan.
Yeah, I'm gonna drop out of this space, man. This is over. Yeah, that was a tough day. Tennessee screwed me on the money line there. I had 6 or 7. Needed them to take that against the Jets. They couldn't hold that, and then the Jays did everything they could to get in. But yeah, Yankees and Red Sox just took care of business, man. That was a tough Sunday yesterday.
Oof. Yeah. That's tough. I kind of wanted to see the Jays in because it's fun to see other teams get in there in the mix, and the Red Sox have not had a great second half of the season. So
Yeah, it's just Toronto sports fans. If there's any folks on here from Toronto or Toronto fans, you know what I'm talking about. We don't get to have nice things, except for the Raptors, of course, a couple years ago. But other than that, it's tough times.
yeah. Okay, looks like we got one more minute here. Cool. So it's almost 8 o'clock. I just want to go over some of the talking points here. Luke and I discussed this earlier last week. We figured, maybe it might be a good idea to have a discussion about Abaxx technologies, and I won't call it Abaxx. I'll call it Abaxx technology. Somebody corrected me on my YouTube video that I was pronouncing the company wrong. And so anyway, we figured that the company didn't have an operations update in the last several weeks, and it might be kind of fun to test out a Twitter Spaces, see if we could get some discussion going about the company, talk about what some of the highlights of Q3 were, talk about the balance sheet and what we can look forward to in Q4. I haven't hosted a space before, so I reached out to Luke and asked if he could maybe help assist with some of the technology issues. And so we talked over the weekend. We kind of set up an agenda for the meeting. And we decided that while we would like to hear from everybody, at least for the first 15 to 30 minutes, we're probably just going to have a discussion between the two of us so that we don't have a lot of people talking over one another. And quite frankly, it's going to be pretty challenging for me to manage the call and hit all my talking points at the same time. So I apologize to anybody if they really have a burning question. I will try to make myself available after the discussion if anybody wants to chat and keep the conversation going, or they have questions, and I'll do my best to answer them. And I'm sure Luke will try to make himself available as well.
Yeah, for sure.
Cool. So it's a minute after 8 here. And I also want to thank people who sent me some DMs with some questions. I really appreciate that. So first things first, some disclosures. I'm sure it's going to be a shock to everyone on the call here that I am long Abaxx Technologies. That's pretty much the shock of shocks for everybody who's listening here. But I've been long because I'm a legacy shareholder for over a year at this point. And not only have I been invested in the stock, but I've actually increased my investment this past spring when they were doing their capital raise. I really believe in the story. I've had a long time, a long opportunity to do additional due diligence on the company. And initially, when I saw the RTO filing on September 18th, I thought, my goodness, like, what is this company? And I thought maybe, I'll sell my stake in New Millennium Iron. But the more I dug into it, the more I really liked the company that Josh put together. And I think that the fact that we have a lot of people on this call is a testament to the team that Josh has built and the company that he's built, and a lot of the work and sweat and long days that the company has put in and the executives have put in to try and get the exchange up and running, as well as the tech going. So, like I said, I'm long the company. I'm long Abaxx. Luke, are you long as well?
Yeah, I think it's probably pretty clear for myself as well that I have a pretty long position in this company relative to my book. And yeah, it's kind of the same kind of journey, right? And it starts with your work that you put out back. It would have been, I think December might have been your first piece that I found in kind of January. And at that point, I had a pretty strong portfolio kind of running as microcaps seemed to do at the beginning of the year, and started to kind of trim it and put some money into Abaxx. And then it's kind of the same journey you took, where the more DD I did, I was like, shit, I think this is there's so much going on here that it makes sense to kind of increase exposure. And I was part of that run that we had up in April to like 450, and then we had the dilution to get essentially set up the exchange to have the 10 million credit revolver that we needed there, and kept like kind of getting to know the company more, and also wanted to take on writing. Essentially, was in Toronto for most of this pandemic, and that was kind of tough. Every day was Groundhog Day. So writing was kind of something to take up. Toronto was the most locked down city in the whole world throughout COVID, right? So it was tough to go out and do stuff. So writing was kind of a cool way for me to keep my brain sharp. And I thought Abaxx really challenged me. So the more I kind of learned about this company and did, ancillary research on the things that it's going to be involved in, I thought this made sense to kind of take my position a little bit deeper. And yeah, so now kind of here we are now. And I'm happy that we're able to kind of put this together. If there's new people on the call who've never heard about Abaxx or only know a little bit, I think you're in a pretty good spot to hear from James. We had a Twitter Spaces event that was actually hosted by the company. We're just hosting this ourselves here, but James wasn't able to make that. So it's pretty awesome that you get this opportunity now to kind of share your knowledge, right?
Yeah, I wasn't going to bring that up, but that's kind of a sore topic for me. This is like a redemption for me to host this space. So I appreciate that. And I was kind of texting you back and forth during that call, and you were able to get a few questions in for me. So I really appreciate that, Luke. A few other disclosures. I just want to say that I haven't discussed this with the company. Luke hasn't discussed this with the company. We just decided to put this on ourselves. The opinions and topics that we discuss are our own opinions and not representing the company. And of course, please do your own due diligence before making any investment decision. I know I don't need to say that to this group, but just wanted to put that out there.
For sure.
Yeah.
Okay, so oh, sorry, go, James.
I was just going to say, as I mentioned a little bit earlier, what we want to do is kind of test this out as a spaces. See if there's interest and demand from the shareholder base where we might have quarterly calls. So this will be like the first trial balloon to see if we want to have a quarterly call or a call around major events like the exchange launch, or maybe like when base IPOs. And so we'll see how this goes. I know there's a lot of people who weren't able to make it today who were DMing me. And so if this goes okay, I'll probably post the recording either on YouTube or somewhere else.
And if I may quickly say, Fiducia and QCap, I appreciate you coming in here, fellas. I know I I do talk about my stocks a lot here on FinTwit, and you two are two good follows. So I appreciate you jumping in on this spaces here to learn a little bit more about Abaxx.
Awesome. Yeah, the more the merrier.
I think yeah, James, are you ready to go here, brother?
Yeah, absolutely. Let's go.
All right. Let's kick it off with your piece you put out in July. That was chosen by Seeking Alpha as a top idea by the editors there. And maybe at this point now, you could kind of go over, how you profiled the company, kind of how you see Abaxx as a company, and kind of break down that asymmetric risk reward profile that you put out in July and where we're at here now at the end of Q3 into Q4.
Yeah. So I come from a deep value perspective. And so traditionally, all of the companies that I've ever evaluated, I'm looking for like almost cigar butts. So Abaxx is really atypical to me because this is like a major potential growth company. But what's fascinating is that in many ways, if you do a sum of the parts analysis, which is effectively looking at, if I take together all of the pieces of the company and I value each of those pieces, and then we look to liquidate that, what could I get? And so in that type of scenario, when I wrote the piece in July, it was around just over $4 a share, and the share price at that point in time when I published was I think like $3.35. But the upside, if they can execute, is just absolutely enormous. I mean, if you look at the potential for their exchange, which we'll talk a little bit more about later on, but the LNG exchange, I think I valued that at about $15 at a 1 year. From launch of exchange, they could potentially hit 20% of their total addressable market for LNG. And I thought that could be potentially worth $15 a share. And I thought that within 2 years of launching the exchange, they could get to $38 a share. Now, that valuation was based on a total addressable market of $500 million and the fact that they could get 20% of that total addressable market in year one and then up to 50% of that total addressable market in year two. Now, within Q3, they disclosed that not only did they increase their stake in the exchange, they actually increased it from 81% to 91%, which is a pretty big jump. And that actually bumps up the valuation targets for me to $17 in year one to $43 in year two. So that's not a small little multiple there. Or that's not a small bump. That's like a really big bump. And you might ask yourself, well, how did they wind up doing that? It's kind of unclear how they bumped it up from 81% to 91%, but I believe it's because when they raised the cash in May, that the technology company, which is the parent, was effectively raising the cash and then distributing that down to the subsidiary, which is Abaxx Singapore. And we'll talk about the structure of the company in a little bit here. And because they were kind of giving that $10 million cash buffer for Abaxx Singapore, I believe that was what caused the increase in the exchange from 81% to 91%. That's kind of speculation on my part, but I believe that kind of checks out. So when I reevaluated the sum of the parts analysis over the weekend, I was kind of taking a look and I said, you know what, when I did the sum of the parts in July, iron ore was trading at $220 a ton and the exchange was 81%. So I upped the exchange percent to 91, and then I reduced the price of iron ore when evaluating their iron ore properties from 150 was my baseline case down to 110 because the spot price of iron ore, 62%, is now trading at about $117 a ton. So I feel like spot price of iron ore won't likely drop below 100 anytime in the near future. So I think 110, we're not going to go much below that. But that made me feel like that's a more appropriate valuation of the iron ore. And so that gave me a sum of the parts revision down to 385 from, I think it was like around 410 or so. But that's still a pretty big upside for a liquidation for a firm that's valued at about, I think it was closed at 318 today. So long story short, I'm still very bullish on the company, despite the fact that they pushed out their exchange timeline by a few months. I think the sum of the parts indicates that there's still an asymmetric risk reward profile here, based on the fact that the liquidation value is around 385, but the upside potential of the LNG exchange, once they get that up and running and they execute on that, is like 5x or 10x or even more than that. So the risk reward profile favors that. And that doesn't really even get into some of the pieces that I think are undervalued within the balance sheet. And I'll talk about that in the structure of the company a little bit later. But things like base, I'm not really even giving much of a valuation to, and I'm giving zero valuation to the tech patents and the tech portfolio, even though I think that that's really valuable as well.
Yeah, and like I would just add in here some of the work that I've kind of done in my DD on this company is looking at other exchanges, and the notable ones obviously are DME and ICE, and these are just free cash flow generating machines. Like the operating income, and I know US reports things just not really differently; they just have different call things different. But you're looking at what you have EBITDA before interest and taxes.
Mm-hmm.
The margins that CME runs is 54%. Like over 5 years, just over that. They're creating so much, essentially, so much cash for their company that I believe the way that this company is going to get valued will become something entirely different than what we see right now, given the strong margins the core business can run for Abaxx, that being the exchange.
Yeah.
So there's a lot of things that we don't know just yet. Like we're still waiting for perspectives on base to kind of jump into that a little bit more. And I've said this, I say this multiple times, like I'm not going to try to value Web 3.0 applications. That's not my Kia forte. So I just see the exchange being a strong enough business in and of itself, that it warrants the attention, right? And then executing is what we need to see going forward here. So,
Mm-hmm.
Where do we stand, James? You mentioned the balance sheet here. Do you want to dive a little bit farther into how you kind of see or view the balance sheet after the quarter that's just closed now?
Yeah, and then after that, I would like to talk about the corporate structure a little bit. But yeah, I think from the
Yeah.
balance sheet, if you look at Q2 equity, it was about 34 million, and working capital was around 33 million. They're running at about around Q2, they were running about 1.2 million per month in burn rate. So Josh had come out over the summer and said that once base was kind of taken care of, that their burn rate was actually going to be closer to 1 million a month going forward. They had spent a fair amount of resources kind of developing the base model. And then eventually when that gets spun out, some of that administrative overhead is going to be reduced. So I am kind of modeling out that there'll be like 1.2 million in July, 1.2 million in August, and then in September, I think they're going to be closer to 1 million. So that's about 3.4 million in OpEx, operating expense for the quarter. And that would reduce their working capital down to about 30 million. If you think that, okay, they need 10 million in the kitty for the cash buffer for the clearinghouse, that gives them a 20 million buffer over the course, which they could probably go through in about a year and a half. So that gives them a runway of about a year and a half to execute that on that. And that doesn't even give, that doesn't even account for the fact that they'll have base carbon shares that they could potentially use for cash if base really takes off. They also have a couple of other things on their balance sheet, which I'll get into a little bit more when we talk about the corporate structure, but they have their 18% equity interest in Passig and Hudson. They have the $2.2 million valuation of Smart Crowd, which right now is valued at like 800,000, but there's a liquidation or liquidity event that's going to happen by the end of Q4 that should reevaluate the firm's interest up to 2.2 million. So there's things that they could sell that are kind of undervalued on the balance sheet that could give them cash and reduce their need to go to the market to look for cash for working capital purposes. Of course, there's the shelf filing. I think we'll talk about that in a little bit. But for me, I feel like their balance sheet is really strong, and they have no need to go out and raise capital. I think that if anything, they're in a really strong position if they execute, where they could potentially dividend out all of the base carbon shares as opposed to holding on to those for working capital purposes.
So do you see, like, just off the cuff here, do you see potential for some of those shares to come out and kind of break down, essentially kind of space them out? So you might see shareholders get them at one point at the beginning, and then at X months down the road, you're going to see another dividend out to shareholders.
Right. So the messaging around this from management has been that what they want to do is they kind of want to reward shareholders in the company because there's been a little bit of a longer runway to getting the exchange up and running. That said, they need to be prudent and conservative with their balance sheet because they're a startup company and they could run into additional roadblocks or administrative challenges or another pandemic, hopefully not. But, there's always things that can pop up, force majeure or something like that, where they need to have cash on the balance sheet. So it's the conservative and right thing to do, particularly for a startup company, to kind of retain that extra cash. But I think Josh really wants to reward shareholders, and he's mentioned the possibility of dividending out somewhere between 5 to 7 million shares of base carbon, which I think works out to something like if you own 10 shares of Abaxx, you would get 1 share of base carbon. So my guess is he's going to do something like that, where you do like a 10-for-1 or a 15-for-1 initially, and then he'll hold on to the shares of base carbon, or the company will hold on to the shares of base carbon and potentially dividend it out at a later point in time. Or should they run into issues that are unforeseen, then they can always use that for working capital purposes and not dilute shareholders. So it's still going to add value either way. Mm-hmm. The other thing is that, this is obviously kind of a theoretical discussion, because at the end of the day, it's the board of directors who makes the decision on whether or not the company is going to dividend out those base shares. So while Josh has an opinion on it, and he's been very open about that, it's ultimately the board of directors who make that decision.
Yeah, it's a good point to bring up for sure. So you mentioned capital structure of the company a couple times here. Do you want to dig into that now, or do you want to look at kind of positive developments that are coming that maybe occurred in Q3?
Well, one other thing I want to mention about the balance sheet is, so I think that as of earlier today, I think what could potentially happen is that you may have a slight positive earnings result at the end of Q3, where it's like between a few $100,000 to maybe $1 million in earnings, which would result in between like half a cent to a penny. That is based on the fact that they had this equity event with Base, where Base is now 30%. They own 30% of base carbon, but it was on their balance sheet effectively for $1.4 million because they own 5% of Air Carbon. Air Carbon was gifted to Base, or the 5% stake in Air Carbon was gifted to Base, and some, I think, time and energy from corporate executives on Abaxx was kind of part of the deal. And so that was how they wound up getting 30% of base carbon. When that's reevaluated using the equity method, you're effectively looking at what's the base, the book value of Base, and the book value would be 30% of $16 million and 30% of that 1.4 million of the Air Carbon. And so that gives you about $5.2 million for their stake if you use the equity accounting method. And then if you take out the 1.4 million of their initial investment, then it's about $3.8 million. So that's kind of how I derived that initial earnings. And then you take out the OpEx on that, and you're basically break even for the quarter. There's the potential that they may not adopt that in Q3. They may adopt it in Q4. And if that's the case, then they'll show a slight negative earnings in Q3, but it'll be positive in Q4. So it just really depends on when they adopt that accounting method. But that's how you would, that's how I look at it, in my opinion.
Yeah, and I definitely know we have some people that are new to Abaxx on the call. So just for some context, because we've been dropping a lot of carbon terminology. So essentially, Air Carbon is an exchange that is run on distributed ledger technology that kind of basketizes carbon credits into sort of, it puts like carbon credits together that you can buy. It makes it a lot easier to access the voluntary carbon market. And Abaxx has an interest in this company having been part of different Series A financing rounds, and Air Carbon Exchange won Best Carbon Exchange from Environmental Finance. So the awards that come out this year, this exchange is making headway in the voluntary carbon market space. So that's kind of the lever there with Abaxx's exposure to voluntary carbon markets right now is an exchange that seems to be performing quite well. And it's run by some pretty smart people. The Smarter Markets podcast, they've both been on there.
Bill Pezos.
I can't remember his name right now. Bill Pezos, that guy's a legend. Yeah, that guy. They're both great interviews if you can check those out. But essentially, that's what we're kind of talking about right now is the exchange that Abaxx has an interest in, and then the company that's going to get spun out. So, just wanted to kind of provide some context there for listeners.
Yeah, absolutely. And I think that provides a good segue, Luke, and to like what the corporate structure is. And so if you know about this, then bear with me. But I'll just take a couple of minutes because I think it's a little bit confusing if you're a new shareholder. So effectively, in my opinion, there's 4 dimensions of Abaxx, and I'll put a plug out there for Eric Townsend's Dimensions of Abaxx podcast that came out like in, I think it was March of last year, of earlier this year, that goes over this in much greater detail. But effectively, there's 4 different dimensions of Abaxx. There's the tech arm, which is 100% owned by the company. And so within the tech is the suite of patents related to Web3 productivity apps like the Sign and Verify, the Vault, the video conferencing, the chat, and then also the identity management, which is ID++. And so that's all kind of bundled together in the tech. I think there's 9, maybe even actually 11 patents that the tech firm owns related around those. And we should get a first glimpse at that in the quarter ahead. Then there's the second arm or second dimension is the exchange, which is Abaxx Singapore. And so, as I mentioned earlier, Abaxx owns 91% of the exchange, and within the exchange is both the exchange and the clearinghouse. So they're a full stack exchange, meaning that they have both the exchange component as well as the clearinghouse and the software that kind of connects the 2 parties. And so that's what they're going to be in the quarter ahead, enrolling participants in the exchange, creating data integrations, testing the end-to-end scenarios that they need to test to make sure that everything works. And then they're going to be rolling it out by March of 2022. So they own 91% of that. Then they own 100% of the legacy New Millennium iron assets, which is a string of taconite deposits known as the Millennium Iron Range. The most mature of those deposits are a deposit known as KMag and LabMag, which itself had a $50 million feasibility study done on between 2011 and 2016. A lot of time and energy was put into those, but because the iron markets tanked shortly after that kind of got shelved and put on care and maintenance. And when Abaxx did the RTO, they were valued at close to zero, to be honest with you. But now there's a greater interest in high quality iron ore properties, and Abaxx shareholders own 100% of one of the biggest taconite ranges in the world. And within that iron ore suite is also a port royalty where they own a 6 million ton per year port royalty where they get 10 cents per ton. So it generates up to $600,000 a year. And they also own 8.5 million tons of a a port access where they could potentially, if they put a taconite property into production, they'd have a free port up and running, which is something that would be worth probably $10 million if somebody tried to buy it from them today. Then the fourth dimension and the final one is the other non-core holdings that they have. And within this dimension, I would have base carbon, which we talked a little bit about, that they own 30% of. There's air carbon, which they own 7.5% of. And after the base spin out, they'll only own 2.5%. They own 18% of a prospector generator called Passig and Hudson, which they have kind of a close relationship with. And Passig and Hudson have a number of interesting tech patents and companies that are within them, like Sing, Argos, which is like an identity management software, and then a couple of other things like Githmo, which is kind of like ICE is backed. So then they also own 45% of Operem, which is a IP exchange, and then Smart Crowd, which I mentioned before, they'll own about $2.2 million worth of that. And so most of these things are valued pretty close to zero or less than $1 million, but they have the potential to increase in value quite a bit. And like I said, they could potentially monetize those things.
Okay, right on. Yeah, given that there, some of we kind of already touched upon some of the positive company developments that happened in Q3, but other things that you see that the market maybe, didn't pay much attention to because maybe they didn't really have to, or just things that you think are going to really help us, take the next step going forward now that happened in Q3 from your perspective there?
Yeah. So I think that there were really like 4 different key positive developments that occurred within Q3. The first of which I think most people didn't really pay that much attention to, was they added some key executives as well as a key board member. So they added a guy named Steve Frey as the chief financial officer. And he came from Gold Money, so he obviously has a close relationship with Josh. But everything I've heard about him is he's like the consummate professional, really smart CFO who knows a lot about corporate finance. And he is replacing a guy named Bob Beaujolais, who was kind of a hired gun at NML. He came in at 2018 and was sort of there as a part-time CFO. And because he was there for the last 2 years of NML and had some experience with the balance sheet and some of the filings, he sort of operated as a bridge for Abaxx to file their annual filings, where they were kind of doing both a filing for NML as well as a filing for Abaxx. So it made sense for him to kind of hang on till the end of last year. And then they kind of went on a search to find a great CFO, and I think they did find one in Steve Frey. Then they also added Cyrus Haramanak on the board, and he appears to be an excellent addition. I think he can add a lot of value to the company. So the second thing is the formation of Abaxx first prospector generator SpinCo. We've been talking about it for what seems like a long time, but like I went back to some of the filings in Q3 and I was like, oh my goodness, this only happened like around middle of July. And so Josh had been talking about the fact that he wants Abaxx to be a prospector generator. And so this is the first company where they basically created the company out of an idea, and then have been talking about that idea in private for the last year, developing it. I think having Bill Pezos and Tom McMahon on Smarter Markets kind of helped build some of the interest in that idea within Abaxx, and the fact that there's a greater interest in voluntary carbon markets and a demand for offsets, particularly around like LNG, that created this idea of like, okay, well, why don't we create a prospector generator model where we can kind of create a spin-off company called Base Carbon that will do carbon credit streaming, similar to Carbon Streaming Corporation, which has $1 billion market cap, by the way. And we can leverage the relationship that we have with air carbon, where Base can effectively create and buy these voluntary carbon credits, and then help list those carbon credits on the air carbon exchange. And of course, this is me kind of thinking through some of the theoretical implications of the relationship there. So this is not set in stone. This is just my thought process on it. But I think that relationship is very symbiotic. Whereas if you look at Carbon Streaming Corp, and no disrespect to them, but their model is they're going to go out and they're going to buy really high quality voluntary credits, and then they are going to help sell those credits to multinational corporations that have an interest in carbon credits and voluntary credits. So there's a little bit of a difference there, right? Where carbon streaming is going to try to sell the credits that they're buying, and Base Carbon will potentially list those credits on an exchange where you get the best market price. So with Carbon Streaming Corp, they're going to be negotiating those types of deals. And with Air Carbon, they could potentially just list those and let the market decide what the value is. So, I think there's more to come on that, but it's really quite interesting. And so some of the key aspects of that Base deal, which we've gotten nuggets of over the course of the last quarter, is that they raised capital at 50 cents per share. Abaxx is going to own 21.5 million shares of Base Carbon, and that those shares would then be, if you valued those at 50 cents, that's about $11 million if you marked it to market. Those shares will then be dividended out to Abaxx shareholders potentially, or retained within the company. In addition to that, Abaxx is going to have a 2.5% revenue royalty from Base Carbon, where Base Carbon will be using Abaxx's software. And if Base Carbon wants to get out of that 2.5% revenue royalty deal, they have to pay $150 million US to Abaxx to stop that deal. So essentially, that would be quite a bit of money to get out of that. But I think that if Base really takes off, that could be a very lucrative revenue stream to Abaxx every year, just basically collecting a several $1 million royalty from Base potentially. And they have a similar deal with Abaxx Singapore and the exchange, I should say. Then the third key development, which I think was much anticipated by the market, and we saw a big run up in the share price when it was announced, was obviously the approval in principle of the clearinghouse. To me, that was a really big de-risking event for the company, and I'm surprised that the market hasn't really valued it as such. But if you really step back and think about it, Abaxx is one of 4 companies in Singapore that have a full stack exchange, meaning that they have both an exchange or a marketplace along with a clearinghouse. The other 3 are billion-dollar companies in their own right. You've got ICE, which is a $80 billion enterprise value firm, and obviously that's a subsidiary of ICE, but it's a pretty big book of business for them. Then Singapore Exchange is, I think, $8 or $9 billion. And they really came on in the last 10 years with, they had a benchmark exchange in iron ore. That really kind of set Singapore Exchange up. And so Abaxx has potentially a similar trajectory where they're looking for a benchmark contract with LNG instead of iron ore. And so I think the fourth one is Asia Pacific Exchange, and they're privately owned. But if you really think about it, all trades have to be cleared and they need to have an exchange. It's somewhat easier to get a exchange approved in Singapore, but to get a clearinghouse approved, there's only a handful of those. And so any OTC exchange will have to go to one of those 4 clearinghouses and have their trades approved. So theoretically, Abaxx could be generating revenue from clearing third-party exchanges. Obviously, they want to clear their own trades, but there's a lot of value there. And if you look at the last full stack exchange to be sold, which was really just sold for liquidation value, it was $150 million to ICE in 2013. If you just evaluate that with like a 3% inflation, that's about worth $200 million to Abaxx if they were to just sell that, because it takes years of time and energy from a lot of staff members to put these things together and get through those regulatory hoops. So I think that the market didn't appreciate that, and I think that the market will come to appreciate it in the quarters ahead. And finally, the fourth development that I thought was really positive for Abaxx was the shelf filing. And I think a lot of people saw that and they went directly to the fact that there was like a 6-month push on the exchange. And they also looked and said, oh my God, the company's looking to raise $50 million. I thought that they said they didn't need the money. So I think there was a kind of a misunderstanding of what they were trying to do there. And the messaging was slightly muddled. And so in my opinion, what they're really trying to do is they're trying to pacify some of their financial clearing members who are going to be in the exchange and the clearinghouse with them, particularly the clearinghouse. And what they need to be able to do is to show, like, if there's a huge amount of volume and a huge amount of interest in the LNG exchange, they need to be able to raise their capital buffer from $10 million to say $20 million or $30 million with relative ease. And they need to be able to do that quickly. And so this shelf filing effectively acts as a credit revolver for them to raise capital in response to demand for the exchange. So it's really a positive, in my opinion. It's a major positive because they're able to raise cash quickly if they need it. And by the way, it's not just equity that they could sell. They could sell warrants, they could sell debt. And so, I think there's more to come. And you have to also keep in mind that it's a preliminary filing. They haven't finalized it yet, which is why I think that they didn't put any PR out there at the time. And so, I hope people understand the context of that and didn't just knee-jerk sell into it.
Yeah, I definitely seen that there might have been some of that going on for a couple days there, but yeah, I mean, it took me off guard for sure a little bit. I was hoping we could be up in Q4, just given you can see it's already happening now with natural gas prices. And it's funny, FinTwit took to natural gas. Like, not that I was expecting that to happen, but I was like, this is perfect. This is exactly what I want FinTwit to be talking about right now, because we're bringing a solution to market. And I was hoping Q4, I was hoping we could get in this year. And then just selfishly to have a full year, just look at Q1 as it's a full 90 days looking at a report, and whenever they would put it out in April, and just kind of be able to track the progress and volume and open interest on the exchange through the year. But now we kind of got to get ready to not have too much going on in Q1 perhaps, and then Q2 next year is where we see, a full quarter likely. And that's all subject to however that plays out. But maybe, James, in your opinion, what do you think lies ahead now for Q4 and maybe Q1 of 2022?
Yeah, I was going to say, in response to your comment about FinTwit, it's like they dropped lumber like it was hot. They
Yeah,
got on the nat gas train. Yeah, so I think what lies ahead in Q4 and Q1 is, if you look at the shelf filing, you can see like an updated description of the timeline. And so what they really need to do is finalize the LNG contract if it hasn't been finalized already. And that is going to be kind of core to bringing on new participants to the exchange. And so there's been a lot of discussion about, like, well, what is the contract and what are some of the details around that? And I think we have to wait. I know Josh had mentioned that there's like 100 different NDAs that they had signed with various parties that had shown interest in it. But they were still finalizing some of the details. What we do know is there's going to be a physically delivered contract in the Asia Pacific region. They're likely to have multiple ports in addition to Singapore, possibly one in Japan, maybe Korea. And so, yeah, I don't know that for sure, but I'm kind of speculating that they may have the ability to kind of flex delivery on that. And then there's going to be obviously some interest in what the specifics of the contract are. And so hopefully those are being kind of hammered out right now. So once that's done, then we would start to see some participants onboarded onto the exchange, and also financial clearing members participating on the clearinghouse side of it. So financial clearing member is like a brokerage or a investment bank, or a party that's effectively going to help them clear trades, that is going to act on behalf of the participants on the exchange, helping them to facilitate trade matching. And so Abaxx, I think, I might be off on the numbers here, but I think Abaxx basically puts up 30% or 20% of the cash in the clearinghouse, and the financial clearing members make up the rest of it. And as the exchange scales to a larger degree, they have to kind of increase their cash buffer with time to de-risk the fact that they might have a larger amount of trading that day in a given day. So once these members are onboarded, then they're going to see the Abaxx console and some of the software that's around that. They'll get trained on the software applications in the console. There's going to be data integrations built out between the exchange participants and the clearinghouse members. And then you're going to have training of the participants to make sure that they know how to trade on it, that they know how to use the software appropriately. And then you're going to do end-to-end testing, where they're going to test various scenarios and trades and clearing to make sure that there's no bugs in the system, right? And so those are things that they would have to do anyway, but those are the items that they will have to do to basically get final approval. So these are that's why it's approval in principle. It's not approval, because they have these final pieces of the puzzle that they have to put together before they can get the final approval. But they would have had to do them anyway. So it's not like they're going to be held up by anything at this point. So as far as I know, there's no additional administrative roadblocks. It's kind of they just need to get everything put together and execute at this point in time.
And James, do you see Air Carbon's like essentially the ability to attach a carbon credit to an LNG contract? Do you think that's going to be part of this whole process, or are they going to hammer that out? Like, are they doing that concurrently, you think, or is that going to be something that once they get that approval, they can kind of shift gears and kind of just place Air Carbon's trading on top of their contract?
Yeah, I think there's still some more information to come out around that, but they kind of hinted at that in the shelf filing, where they said that they're going to do a paired LNG and carbon credit trade. So if you looked at the filings a year ago, it was just a pure LNG contract, but now they've kind of value added to that by saying, okay, in addition to the LNG contract, if you want to do a carbon offset on top of that, we're going to do a paired trade with you. So I don't know if that's just going to be the Abaxx exchange with the offset and the pair trade, or if that's going to kind of bring in Air Carbon as well. I think there's some details that we need to hear about. But what that really looks like is if you have a ship going from Dubai and it's going to Japan, the trip might consume or put out the equivalent of 400,000 tons of carbon. And so the buyer of the ship cargo may offset those 400,000 tons of carbon with carbon offsets. And so that would be a carbon neutral trade, where they're effectively offsetting the journey from port A to port B. And so I think that they have a calculator around that, where they're going to say, okay, this port here to this port there equals this amount of carbon offsets, and that's what you need to buy in order to make it carbon neutral.
Yeah, and we're starting to see this occur, right? I think it was Shell China, or a couple different countries and companies in the APAC region are starting to get this done. It's not like we're sitting here greenwashing, hoping we can sell carbon credits. It's becoming a utilized item in the space right now, currently, right?
Yeah, absolutely. And like you said, it's been, I think the first one I saw was last spring, and then I've just been seeing a higher frequency of these carbon neutral shipments. And so, I think there's definitely a demand for it, and it seems to be increasing over time. So.
Mm-hmm. Anything else you want to touch on in terms of Q4, Q1 before maybe we start looking at some questions?
Yeah, so I think the only other aspect here is that there's two other things that could potentially happen in the next few months, and it's kind of unclear when these will happen, but I'm speculating that we will likely hear more about base carbon. I think that Josh had teased the fact that there could be another capital raise for base carbon as they want to scale up that business. If they do another capital raise, obviously that will reduce the equity that we own, but it might increase the price, right? Because they raised capital initially within a small group of people, and they raised it at 50 cents a share. Josh had mentioned the fact that they may try to raise capital at the equivalent of $1 a share, and this would allow them to really go aggressively after some of the voluntary carbon credit markets. And then, who knows? He had, I think, there was some discussion around possibly a listing of base carbon in Q1 of 2022. So I think sometime between Q1 and Q2 of 2022, we're likely to see an IPO possibly. So I think we're going to hear more and more about that. The other thing is that as participants get involved with the exchange, they're going to see ID++, they're going to see some of the software applications. And so I think we're going to see demonstrations of that. We're going to actually see that product. It's not going to be vaporware to us anymore. And I think that that's going to generate a lot of buzz and interest in the potential for their software services, which, like you and I said, we basically give that $0 valuation right now. But there's the potential for that to really take off. DocuSign, I think, is selling at 27 times sales. So if they have a really interesting sign and verify application or a chat or one of their other software applications, we could see, some interest from the market as well. And so I think we're going to see a lot about that. And one last note on the software and the timeline. If you look at the shelf filing, there's like one last bullet point at the very end about NFTs and the potential for NFT auctions. I think that might be a second SpinCo. This is total speculation on my part. But like if you look at a company like OpenSea that recently raised capital on $1.5 billion, $1.5 billion valuation, there's a heavy interest in NFTs and the potential there. And so they could leverage ID++ with some of their software applications and the wallet that they're going to have to maybe create a NFT app where you can store or auction off NFTs. And I think that what they could have is kind of like a wallet and a decentralized application where, it's a landing page for a lot of people. And then they kind of use that as a browser along with ID++ going forward. There's a lot more to come there, and it's really exciting. But again, I value it as $0 right now. So everything else we've talked about is kind of where the value is. But there's significant potential within the software too.
Yeah, that's exciting stuff. I really appreciate your ability to kind of opine on that, because that's where I kind of falter in trying to make sense of that stuff. And that's just having exposure to it is incredible, because it obviously takes off, right? So I mean, outside of Abaxx and what's going on right now in that NFT environment. So yeah, it's cool to just have some exposure to that, not putting a lot of weight into it right now, right? We got a lot to take care of, but just knowing that could be coming down the pipeline for free for us is incredible.
Yeah, absolutely. So there were a couple of questions that we had that came in through DM. So I'll try to take those, and then I will do my best to take a couple of questions from the audience, or Luke and I can take that if you have questions for Luke too. So one question I got was, why can't CME or ICE just create the same LNG contract? So this is a really good question, something that I've given a lot of thought to. Basically, CME does have a Gulf of Mexico contract right now. that is physically delivered in the Gulf of Mexico. So the key difference here is that it's physically delivered in Gulf of Mexico. Then the buyer would have to arrange travel via an LNG ship from the Gulf of Mexico to Asia or Europe. There's significant risk there. CME hasn't really traded any volume on that contract, likely because they don't care as much. They're generating a lot of revenue from some of their other oil and gas contracts, which industry players are using to hedge their risk in natural gas. So they haven't really had a need for that. They are putting out a freights futures, which Luke, you had actually posted and kind of keyed me into, I think it was a week or two ago. And so maybe that will be like the magic sauce for them, but so far it hasn't really taken off for them. ICE does have a full stack exchange in Singapore, but to date, they've really promoted their JKM and TTF contracts, which are financially settled, not physically settled. And I think what the recent events have shown us is that you want a physically settled contract because at the end of the day, it doesn't matter if your balance sheet shows a surplus because of your contract hedging. What you really want is the natural gas for your grid so that you can heat houses and keep industry going. So physically delivered contracts, I think, are where it's at. And obviously, if you look at the major contracts that ICE and CME have gotten started on, Brent, WTI, Henry Hub, those are all physically delivered contracts, and LNG doesn't have that. And so that's what obviously Abaxx is hoping to solve that demand for. And also the fact is, like, ICE doesn't want to cannibalize their own business. So they've spent a lot of time, energy, and money building up TTF and JKM. And so if they started an LNG contract, it would take away resources from TTF and JKM and trading activity and make those markets less liquid. So I think they're not likely to do that for a contract that may not make sense for them. What they're probably going to do is watch Abaxx closely, see what happens, and if it really takes off, then they may try to make a competitive contract with them, but that would take a couple of years to put in place. Or maybe they say, you know what, we want to take a stake in the exchange. We want to take a piece of that. So, and then Luke, did you have any other questions that were sent your way?
I didn't have much sent my way, and I didn't expect to, right? But this is one thing I'd want to bring up just briefly, before you kind of give people the mic, is I think it's pretty interesting that Robert Friedland is a big investor in Base as well, and if I've been able to catch his macro voice interviews when he's speaking with Eric and what he wants to do with geothermal and the company he's looking to build out. So I just think it could be pretty interesting to see how Base might be able to leverage capital to help bring his idea to light if they're able to essentially build rigs that can drill into the ground far enough that they don't melt and essentially use the Earth's core as an energy source, right? So I don't know. That guy's up to so much. He seems like he can't miss. So that's just one thing that, again, it's speculation, total speculation, really. But to have Robert Friedland in your corner is always pretty exciting. So for him to have a big piece of Base is something that I think is to watch out for.
Yeah, I just got a question from another Twitter user in my DMs here, and the question is if Abaxx seems, and I'm paraphrasing this, is from FNS. If Abaxx seems like so much of a slam dunk, why are other competitors being valued higher? Is an issue with their marketing? And my take on that is that they really haven't tried all that hard to market themselves. I think Josh has said on a number of occasions that they're not after institutional investors just yet, that they're waiting for the exchange to launch, so that they're not a pre-revenue company, that they're a revenue company, and that once that kind of comes around, that they'll list on the NASDAQ, they'll have like a higher grade institutional IR, and they'll like market the company a little bit more aggressively at that point in time as they seek out institutional investors and funds. And so I actually see that as a bit of a tailwind here, and why you're getting the price that you're getting it at, is because right now, if you look at the makeup of the shareholders, there's pretty much zero institutional investors in Abaxx right now. There are only retail shareholders, and then executives in the firm. So I think the shareholder base is like, basically, I think Josh owns around 15%, 11.3 million shares or something like that. Then I think Andy Fedak owns a couple million shares. Some of the other directors own a little bit of the company. And so I think the executive team and the board of directors own around 20-ish%. And then you bring in key angel investors like Kyle Bass and Robert Friedland. They own about 5% to 6% each or so. So about a third of the company is owned by long-term shareholders who aren't likely to sell the stock. And then the rest of it is people who either got in early as angel investors. There's the legacy NML shareholders who may have decided to get out after a period of time. And then there's retail shareholders who have bought in since the IPO. And so, everybody has their own motivation for buying and selling, but at this point, there's really zero institutional pressure buying the stock. But as we see them start to execute and they get coverage, then that'll be an enormous tailwind for us, because we would expect institutions to jump in and buy a percent of the company. We would expect funds that are interested in ESG and carbon offsets and the green energy as a bridge with the LNG exchange to potentially get interested and involved in the company, potentially in a big way. And so that will really drive a lot of interest and buying volume in the stock, and there won't be a lot of supply because there's a thin float. And so that you could see some really big pops in the stock if they can execute on it. And so, like I said, I actually see that as a positive and a major tailwind. I don't have any other questions. So if somebody wants to ask a question, DM me, and I will do my best to not screw this up on Twitter Spaces. But I apologize if I do make a mess of this. So there's one request here. Robert. Okay. Robert, you can now speak. Robert, I think your mic's off.
You could be on mute, buddy. Yeah.
Robert, I can't hear you. I can't hear you, but if you want to DM me your question, I can answer it that way. Sorry, Robert. Is there anybody else who wants to ask a question? And it may be me who's screwing this up. Sorry about that. Okay.
If no one's sorry, James. I was going to say, if no one's, I can ask a quick question here. I know my buddy Kay here, who's in this space, and also another friend of mine who are kind of big into distributive ledgers and like DeFi. Can you maybe go over how Abaxx may move off an Ethereum chain and utilize a different ledger and/or blockchain? I know some people are interested in saying, okay, Ethereum may not be the best one to use now. So I don't know if you want to speak a little bit on the middleware applications that Abaxx has that will allow it to kind of hop on to another one at a high level and a quick level, and while someone else may be waiting to ask a question.
Yeah, I think we have Robert potentially ready, but I'll try to answer your question.
I'm in.
Okay.
I tried to connect before, it didn't work. You guys had mentioned something about the NFTs at the bottom of a late filing, and I actually didn't see that filing, but I just want to speak to that a little bit because you guys mentioned Robert Friedland, and I think that's an important piece that they've spoken about on that Macro Voices podcast that you mentioned.
Yeah,
where he's hoping to use NFTs to track his commodities. and he
Right.
wants to be able to grade them essentially as
Yeah.
ESG.
Grade
And
and trade.
and I would assume that's what that's for. And that could be really exciting because, you know, you guys are talking about pairing contracts. If you can do that and you can see that someone's switching from coal power to natural gas, that might even award, this is speculation, but that could be awarding them carbon credits because they'd be switching to a less carbon intensive fuel. Or, you know, just grading things on the quality of labor. You know, there's a lot of labor abuses in emerging markets, and I think that's key to Robert Friedland, where he wants people to know that he's got the highest quality labor, the least abuse, and he thinks that that's going to really contribute. And I think that's what that NFT piece is about. I guess if I had a question for you guys, it would be, you know, a lot of these exchanges, they make money on charging data. They make money on membership listing fees. I'm not exactly sure how much they make on a per transaction basis versus like just those membership fees and data, which like maybe the transactions come up from, and then what type of float there is, because people obviously have to post margin. So I know people earn interest on their money that they margin, but I don't know if that's like a split basis normally. So those are just questions that I would have around how would you see them earning money like across those different things, or if there's other models, because obviously all the exchanges are going to have their own models and ways of making money, but those are things that I'm interested in, guys.
Yeah, I'll start off, and if Luke, if you want to jump in, feel free. So you're absolutely right. ICE makes something like 15% of their revenues on data services. It's one of their largest books of business that they have. And CME is pretty comparable. I think they're like around 10%. So I think that there's enormous potential for some type of data service agreement within the exchange, particularly if they want to pursue that. Josh has mentioned that they probably don't want to sell data to their participants and kind of take advantage of participants that way, because oftentimes what they're doing is they're using the participants' own data and then selling that to other services like Platts or something like that. So it's a little early to figure that out. They haven't really mentioned how they're going to monetize their data, but there's definitely the potential for them to generate revenue that way. As far as trades are concerned, the industry standard is typically like $1 on each side of the trade, but it just depends on the product and what they're selling. So I don't think it would be out of the realm of possibility for it to be like $2 for each side of the trade, so $4 per trade initially, depending on the contract size. And then they're also going to have the clearing house generating revenue on the clearing, depending on the size of the contract and how much money is being held and transacted upon. So you're absolutely right. I kind of modeled that out in the article that I had in Seeking Alpha. As we get closer to the launch of the exchange, I expect to tighten that model up a bit. I kind of went off of their total addressable market for the LNG contract alone, which is supposed to be $500 million per year, and their ability to capture a percentage of that total addressable market, which I think is quite high, because if you look at some of these contracts that are out there, it's generally winner take all. Like how many oil contracts are in North America? You know, it's WTI. How many oil contracts are in Europe? It's Brent. You know, there's really, once you develop a dominant player in a given market space, it's pretty much a monopoly on that contract, because players want liquidity and they want to be able to trade in and out of that market, and they want to be where all the action is. And so there's effectively a network effect that takes hold once you develop that benchmark. So if they can get some traction early on, then I think, you know, the sky's the limit with that. Luke, did you want to add anything?
The only thing I'll add is that in looking to see how Abaxx performs relative to the other exchanges, and that's what I am watching, is that market data and information services must just be just like almost pretty 100% margin rev, right? You have that data, now you're just moving it off to someone else in a sale, and CME, that's why they just crush it on these margins. So, it'll take a couple quarters to get some smoothing effects of Abaxx's, look like essentially their trading volume and the open interest on. So those are things I'm watching to see happen on as we get financial information and kind of comparing it to how CME and ICE are doing. But like you said, if Josh is not going to take the approach of utilizing that data, we might have to just kind of see how other things come up to play, right? So things I'm keeping an eye on for sure as we get into generating revenue.
Yeah. Robert, hopefully I answer your question. I got another question here from, hopefully doesn't mind me saying his name, Tyler Thorne, who's a shareholder in Abaxx. He asks if Abaxx executes on LNG and then brings on EV metals, precious metals, what kind of market cap and share price do you think it could be? Well, so everything that we talked about today was really centered around the LNG contract. But with a full stack exchange, they're going to be able to generate multiple contract types. So not only are they going to have LNG and probably a suite of products around oil and gas, as well as carbon offsets around them, but Josh has openly talked about starting a gold contract. Obviously, he has a long history with gold. Obviously, he was at Gold Money. He tweets a lot about gold. And so I'm excited to see what that gold contract will look like. CME and ICE also have, I think, gold contracts as well. And so there's a lot of volume and interest in that. And I think it could generate a lot of trading revenue. And then there's also the fact that they can, Robert Friedland's involved. And so there's a lot of interest in battery metals like cobalt, nickel, copper. My expectation is that gold, because there's been a fair amount of talk about that from Josh and some of his tweets, and there was also mentioned in some of the previous presentations they've given, that gold would be a contract that would come out within 6 to 12 months after the LNG contract is launched, and that the battery metal contracts would likely be 1 to 2 years out. I think that there's still a little bit more time for those to develop, but hopefully I'm wrong and they come out sooner. The question about market cap, I mean, we're looking at if LNG executes within 2 years, $44 price target. So you'd have, if you add in gold on top of that, carbon credits on top of that, copper, it just gets kind of absurd how high you could potentially get. And that's why so many people are really excited about it. And obviously, they just need to execute. The market right now is not paying any attention, and it's allowing retail shareholders to buy in it. We just need them to execute. And as they execute methodically, the share price will start to appreciate. There'll be greater interest in the stock, and the price will start to take off. But at this point in time, the market is basically saying put up or shut up. And so, Tyler, I would expect $50 plus if they can start to put together some of these other contracts and start executing on LNG. But they have to execute. Luke, did you get any questions or?
No, I mean, not for the sake of, you would just be kind of piquing my interest in a couple of my friends who were interested about.
I'm sorry. My apologies. Let me come back to the question.
No worries.
Sorry about that. Yeah. So I wrote an article on Seeking Alpha in December of 2020 on how middleware was kind of central to the Abaxx thesis, because the name of the company is Abaxx Technologies. That's the parent company of Abaxx Technologies Holdco is the parent holding company, and that's what owns everything else. And so I think Josh really has a very grand vision over how identity management in Web3 allows you to kind of own your own identity by putting a key within a token that is cryptographically stored. And so that key is kind of is held and very difficult to break. And then you can tie that key with like a password that you have offline, along with data stores of information that might have like your driver's license or other pieces of information that help verify your identity and who you are. And so you can create a online persona with ID++ that is a business persona, but you can also have like a social media persona that's a different ID++. You can have multiple business personas. So something where within the company and something outside of the company. And then you can also have like your personal account where you have all of your state owned and issued identity. And so what's key here is the middleware is kind of like the ID++ platform that ties everything together. And that ID++ is tied to a base protocol, which the base protocol would be like Ethereum or Hedera, Hashgraph, or something along those lines, right? Then you have ID++ on top of that. And then the third layer on top of that would be your applications. So that would be your Web3 productivity apps that Abaxx has. So that would be your sign and verify application, your vault, where you're storing data, like the video conferencing and messaging. So like the equivalent of Zoom or Snapchat or Slack. And so they have all these applications sitting in the same kind of network that a company can use. And so when Base Carbon or Abaxx Singapore is going to launch the exchange, they're going to have all of these applications in addition to ID++, and it's going to sit on top of a protocol. Abaxx is going to use the NASDAQ software infrastructure initially for the LNG contract and probably for the gold contract and maybe some of the other contracts that they throw out there initially, because it's just too early to have distributed ledger technology settle these trades. But in markets that don't really have settled infrastructure, like carbon markets, there's the potential that they can use distributed ledger technology. And some of these applications are going to leverage distributed ledger technology, like storing files, signed contracts that they can create an NFT out of and pair with a trade. So they're going to be using it in a sophisticated manner going forward. And we're going to hear a lot more about that in the next couple of quarters, I think. So that's a long way of getting back to the question of like the middleware and the applications can sit on top of any protocol. So it could be either Ethereum or Hedera or something else. They've created the middleware with an extraction layer where they can basically put it on top of any different protocol and it'll be okay to use.
Yeah, that's sweet. Yeah, that's my buddy's just gave me a message here. He said that was a solid answer. Appreciate it.
Okay, good. All right. I don't know. I think I got one more from NetSum here. Any thoughts on Abaxx and Base Carbon merging in the future? Their businesses appear to dovetail nicely. In the early stages, it makes sense for their businesses to be held in separate companies, but down the road and in the face of potential competition, it may make more sense to merge. Thanks. Who knows? That's an excellent question. And I think that there is definitely potential for mergers at a later point in time, but it's really early. We haven't even talked about the IPO of Base Carbon yet. And I think there's some regulatory issues with Base Carbon, which is going to be creating voluntary carbon credits or streaming voluntary carbon credits, listing them on the Air Carbon Exchange, and then pairing them with the Abaxx exchange, there may be kind of a benefit from a regulatory standpoint to have them as separate companies and have separation that way, so that they can kind of operate independently and not have a monopoly over carbon credits or something along those lines. So I haven't really thought a lot about the potential for them to be to merged, but as that story develops with base carbon, I think, and we get more information, particularly from a prospectus filing, I think we'll get a good insight into whether or not it would make sense at a later point in time, years down the road, likely, if they can merge. So that's a great question. Okay, I don't think we have anything else. We've been going for about 75 minutes, which exceeded my wildest dreams as to how long we would be talking about Abaxx. And I think I saw that we had over 80 people on the call, which is pretty awesome. So again, I think that's a testament to the interest in the company and what Josh and his team have worked so hard to build. And so hopefully we have a really exciting story ahead in the next quarter and the quarter after that. And hopefully, Luke, if you're interested, I would like to get together with you at the end of Q4, maybe early January, and have the similar discussion.
Yeah, absolutely, man. I'm in for it. This was a good time.
Cool. Well, I guess if anybody's interested and has additional questions, feel free to hit me up with DMs. Hopefully we did okay. Feel free to tell me that you didn't like it or I didn't answer your question or something like that. But if you are interested in future conversations, let us know too, and we'll try to do this either quarterly or around major filings. So thank you everybody for your time, and I think we're going to wrap it up.
All the best to everyone. See you guys later.
Thanks, Luke.
Take care. Thanks, James.